Hi everyone, welcome to Single Value. So today I'm going to talk about my Tesla challenge, which was me putting $100 per week into Tesla for the next 12 months. And this was taking an index way of investing and doing it with a growth stock and just seeing what the outcome was. So far I've put in 3 contributions, so my overall investment is $300. It is overall up by $71, which is about 23.83%. Of course, the $100 is newly put in. So if we took the $100 out, the 2-week performance so far has been incredible. But of course, we're looking at this in the long run. The short run, it's always nice when things do well in the short run. Though we got to test this out and we got to go, what happens if this goes, in terms of the long run? Will this do well or will this fail miserably? If, say, like Tesla goes too high, I buy too much, the price dives, and then how does the portfolio react? We still haven't got into those parts yet, but again, we're only in the 3rd week. It might be many months before we get to see that situation where Tesla skyrockets too high, then comes down quite a bit. But that's the whole idea of this. This is to just teach myself some good discipline and also, to just not think about these things as much. Like, I make a lot of videos on a lot of companies, of course, so I think about companies a lot. But of course, one day I might get bored and decide I don't want to do this that often. Then maybe having this kind of approach will benefit me. And potentially it might benefit you if you're watching this and thinking this might be an approach that you want to take as well, and you're keeping up with the progress and thinking this is a good experiment, so we'll go on a journey, see how this how this ends. Hopefully it ends with happiness and not tears. So hence why, I have put so much money in. Firstly, I want to take the approach of a beginner investor. I want every beginner investor to look at this and to go, everyone can do this. Everyone can put $100 into a stock. If they really wanted to, they'll find an amount that they can invest. It doesn't have to be $100. It could be $20. It could be $50. Or it could be more than 100. It could be like 200. Do what's comfortable for you. But take an approach where you don't have to be that focused all the time on a stock. And if you invest in a stock that just grows, then everything else just takes care of itself. Of course, it would have been nicer to have invested into Tesla at the low price of like $400 or even $450. But at the time that felt high, and as I kind of mentioned in prior videos, the beauty of this approach is that no matter what price it is, I'm still buying. So even though I felt like $400 is really high, and then I still brought it, and then now it's $500 and I still brought it, and now it's closer to $600, and I probably still will buy it because I stick with my approach. Nothing else matters apart from the approach. And so far so good. Of course, we're going to see how things go. The whole idea is that you're investing in such a company that is growing so much, generating so much value, that by the end of the time you stop investing, then you actually have something that's built up quite sizable. It may not feel like it. So like me putting $100 every week doesn't feel like a lot, but of course it's going to add up over time. Now if I do $100 for 52 weeks, that's $5,200, but in that time, if the stock is also increasing, then I'm likely to end up with more than $5,200. So we're going to have to see that approach and see if it actually works. If it works, then brilliant. There's so many good companies out there that I know that just continue to grow year after year, and they'll be better in 5 years than they would be today. And that's the kind of approach that you would take with this. Like if I put in $100 into stocks that I believe have a better proposition in 5 years than they do today, then it doesn't matter what price I buy it today. As long as I continue to buy, and then yeah, like, I don't have to worry about paying a premium, because if price is high today, I pay at a high price. If the price is low tomorrow, I pay at a low price tomorrow, you know. So hence why I like this kind of approach. It's kind of got this beauty about it. So let me know, like, would you be interested in doing something like this in the future? If you would, what kind of stock would you choose? Would you choose like Amazon or Apple or Palantir recently? You can kind of see like Palantir just has that, that beauty about it, that it's got such long-term contracts, and it can also continue to grow in such a nice way that you're going to see a massive company out of that. And if you put in like $100 every week into like, say, something like Palantir, then I think you would also do really well. Of course, I've chosen Tesla, and I like Tesla as a company. I like their products, I like their financials, and the stock price it usually sells at such a high premium that sometimes I find it difficult to buy a lump sum of it. But taking this approach and just buying a little bit by little bit, I feel like it's much easier for me. Personally, it's much easier for me because I do everything to the fullest extent in terms of a calculation of the value, and sometimes that's a big flaw because it kind of makes me really reluctant to pay high premiums for companies. But this approach, I don't feel that bad, so I think sometimes this might be a good approach. So again, we're going to see how things go. 3rd week so far, and yeah, I'm enjoying this. Good discipline. If you got any comments, let me know, or questions. Until then, good luck investing, everyone.